I had a meeting today and we talked a lot about property share. So, property share is only offered by one bank at the moment. It used to be two, but now it's one. And it's where you can buy a property with someone else, a second person. But rather than you both being on the loan together, we can split the loan up and you're each responsible for your share. Now, the pros to this is my applicant has enough deposit, so there's no lender's mortgage insurance. If she's buying with someone who doesn't have enough deposit for their half, then they will have lender's mortgage insurance on their loan. She won't. It also protects their credit files. So if one defaults on the loan because they do the wrong thing, then the one who doesn't default and keeps up with their repayments, they get their credit file protected, as opposed to having tarnishes recorded and missed payments and having issues getting new loans. And there's other benefits as well, but basically it's a great option if you're buying with someone who is, say, a friend or a brother or sister, a really close friend. It does have its cons as well. So it will impact your borrowing capacity if you were to go and buy a second property. So if you bought a property with a friend using property share and then you wanted to go and buy a property with a partner, we would have to factor in for that loan. So bearing that in mind. Also, if the other person stops paying the mortgage, the bank will repossess the property and fire sell it. Having said that, they'll make sure that your loan gets paid out first, but still you are then without a property. So you really want to make sure that you're buying with someone who you have a great relationship with, an open communication, and also someone who your long-term plans really align. But it is an option because it helps you with your borrowing capacity to get up there.